2 minutes after this case study, this chat, this conversation with David Carpenter. Bruce from Title III Funds, welcome to the chat. And so, David, we sort of just want to jump in to this because we know we have some platform owners, some people who are thinking about standing up their own platform. So we want to talk a little bit about the case study with the Securities and Exchange recent enforcement action against TruCrowd. But before we jump into that, can you, one, introduce yourself, give some context as to why you're here, and specifically why we're going to be talking about this case study?
Okay, yeah. So I'm David Carpenter. I'm co-founder and CEO of Assurely. Assurely, what we do is we're in the insurance world, and we build brand new insurance products, or we adjust existing insurance products for changing industries, changing risks, changing customers, which all of us in this space are certainly pioneers in changing the way that companies access capital. And specifically with this space, we've adjusted some traditional insurance products for the changes in the industry, not just the risks, but also the delivery model and how people are raising capital, how they're purchasing insurance, et cetera, et cetera. So that's it. We work with a lot of the portals here, and obviously a significant amount of the issuers as well.
So just keep this in mind as you're listening to this. David's coming from the insurance perspective, which is sort of almost the risk perspective, and risk can be accepted, avoided, mitigated, or transferred. And sometimes when you transfer, that's where insurance comes in. So David, with no further ado, give us that overview of what you found interesting about, or rather, what are the facts about the SEC's enforcement action against TruCrowd?
Yeah, well, first, before I go, I'm not an attorney. My co-founder, Ty Saglow, however, is. He unfortunately is not able to join today. So when it comes to facts, the first one that's very important to say is that these are allegations, right? So that's first and foremost. And I think what came to be a surprise to us were a couple things at a high level. One, that it got all the way to civil litigation. That was a surprise to us, or not a surprise, but that was extremely fascinating, extremely interesting, and had implications. For insurance nerds like us, another implication was that the portal operator and the portal, as well as the issuer, were all named as defendants. That has an implication on insurance. And then just general, the implications of how the SEC drummed up interest internally, or presumably drummed up interest internally, and how they sent a message and or what they could have done, but they didn't, I think was also interesting and telling. And then the fourth, which I think we're going to see more and more of, was the use of the word gatekeeper in the lawsuit. So there's a lot of fascinating things, both from a legal side, which, as admitted, I'm not an attorney. My co-founder, however, is. In fact, he was general counsel at AIG for a long time, and works as an expert witness for complex insurance litigation. So he's well versed in this space, as well as talking to a lot of the other folks in the industry from a legal perspective. But those four things, which is it got all the way to civil litigation, the use of the word gatekeeper, the fact that the portal operator and the issuer, as well as the portal, are all named as defendants. These are all things I thought were extremely fascinating to us.
That is super interesting, and of course, this isn't legal advice, and these are at this current state allegations. And so I want you to dive a little bit into this. Taking notes. When you say the fact that it got to civil litigation, why is this interesting from your perspective in the insurance business?
Yeah, and so we actually have some of the folks in the industry probably have a little bit of a disagreement to us. Is that there is a school of thought. We don't disagree with the school of thought, but I don't think this was our original school of thought. Was that the enforcement folks were looking for an excuse, and that this case was, in layman's terms, a layup. It was so crystal clear that things weren't done appropriately, that it was a good use case to go fire a bow across the industry and say, hey, we want to set a precedent that this is important. That, they didn't do 10b5 or Section 5. Why didn't they? People can speculate. But they're telling the industry that due diligence and being responsible, again, using the word gatekeeper, is important. I think that from civil litigation was an easy way to go out and kind of fly the flag and have the SEC media effort saying that. From our perspective, working claims out, and I don't know, one, we're not in the business of disclosing who we work with or who our insureds are. But if there was if insurance was present, the expectation is that somebody would step in before it got to civil litigation and try to find a way to mitigate this.
So let me ask you a quick question. If, again, this is your field of expertise, if they had insurance, you're saying that it wouldn't have gone to civil litigation. Rather, it may have ended up at civil litigation, but there would have been some steps before that.
Yeah, and I don't know if they do have insurance or not. I don't know what those efforts are. But in our experience, you take an insurance policy and trigger that insurance policy and fund some type of conversation with the SEC. I think there certainly would have been a opportunity to get this worked out, get everybody going down the right path, and using insurance as the financing vehicle to make sure that there wasn't this, for lack of a better phrase, black eye in the industry. I think the right insurance professionals could have got involved and cut this off earlier. Now, was this going to happen eventually? Yeah. I mean, there's the SEC and from everybody we're talking to and other folks, we expect more of these. So I'm not saying insurance would have been a foolproof, but it certainly would have had the opportunity to keep this out of the newspapers and or get out in front of this before it became as big of an issue as it was. Specifically civil litigation, which is not an easy process to get to.
And just for context, I believe this is the first time that the SEC has had an enforcement action specifically against a portal. Let me rephrase, specifically against a portal operator and issuer.
I think this is the first time that it's universally been acknowledged across the industry.
Because I know they've shut down or suspended some other portals. Those are slightly different cases. And so I do want to go back to it. Is it a common thing where the portal operator and the issuer are all listed in the complaint?
Well, being the lack of it's still a new industry. The common thing is what we just saw. This is the precedent that they set, is that there's going to the portal operator and saying, yeah, you have skin in the game here. And I thought that was interesting. Not to go into the insurance side, going into the insurance side, what was interesting for our perspective is that now becomes a directors and officers exposure, which means there's two types of professional liability that portals can typically purchase: directors and officers, and then errors and omissions. By putting the portal operator's name into the lawsuit as a named defendant, the insurance side of things was interesting, and a new precedent was more what was interesting to us, was that he was named, and it was named in the same suit. We were kind of expecting multiple suits. I think we were also expecting that, we don't know what investor noise was happening behind the scenes, but we certainly were expecting investor lawsuits to go first and then SEC to step in second. And I think in this instance, SEC first, and we'll expect to see investor follow-on suits next.
So I see we have a few portal operators and owners here in the audience. So this isn't to scare you, it's just to have a frank conversation about some of the allegations and what we're looking at from the industry perspective. Because when you said you kind of expected multiple suits, and you said from the investors and then later from the SEC or from the regulator, but now it's gone the other way around. Do the investors, can they still follow up with some type of civil action or some type of legal action?
Yeah, we would expect that.
Yeah. Okay.
But at this point, again, less insurance they're at, and what's the pool for them to get? What is their benefit? They're essentially going to have to tag on to the SEC suit at this point. So I think that's going to be an interesting thing to watch as well. And again, not to scare people, this is just generally buying insurance is just a prudent business operation, like best practice, regardless if you're a portal operator or a sole prop consultant, or you're a Fortune 500 company. Things like this will happen. Sometimes they're wrong, sometimes they're right. Specifically, when, from an investor perspective, they can scream bloody murder just because, and get annoyed because they are having a bad hair day or for whatever reason. And so it's managing risk. It doesn't necessarily keep people from getting upset about anything. And oftentimes insurance, that's what that value proposition is. So things are going to happen. We prefer it not to be fraud. We prefer, bad actors or the allegations of bad actors not to happen in this industry, because we're all very much invested in the success, both financially, in the success of this industry growing. But just, I think a lot of people here really believe in I guess the social value proposition of, bringing the crowd into these opportunities. So things are going to happen. So again, this is certainly not to scare you, but the reality is insurance will kick in and can be a conduit to keeping things subdued.
So I have a question from the audience, and the question is, does anyone track the percentage of funding portals that have insurance?
Well, it's not public data. I think we have a good handle on who that is, but I think it's probably not something we'll disclose publicly. But I think there is right now, from a funding portal perspective, it's an interesting market because, candidly, when industries change, when risks change, insurance traditionally has not been the most nimble of industries. That's both a problem, but also an opportunity for folks like us that have done this before. There's an interesting thing is that in the insurance world, there's this thing called errors and omissions. And when you think of errors and omissions, there's technology errors and omissions, to saying your technology product will do what you're saying it's going to do. And then if you take technology out of it, there is, what's being referred to as the gatekeeper or a service provider errors and omissions. Whether you're a broker dealer or you're an insurance broker or you're something else. When crowdfunding in fintech came around, these things layered on top of each other. And that actually created a small hole in the industry. So there is insurance out there that portal operators can buy it's rather inexpensive. The challenge there is it doesn't fully indemnify or cover what their total operations are. And then the other side of the market, there's a limited amount of insurance companies that are willing to take the risks on for what we call comprehensive coverage. And unfortunately, we still believe that's overpriced in the industry, but it's kind of all that's available. We're in the process of building what's in between. And the best practice, which I believe was kind of the question in who's buying it. Most portals, in fact, nearly every portal that we're talking to has made some type of business decision about how they're going to manage risk and including capping that risk, either from comprehensively capping it with insurance or layering it in there. And at this point, it's a business decision, and most portals are engaged in at least the risk management conversation with us.
So you bring up a few interesting points. There's a comment here in the chat. It says, I agree, it is a best practice, but it is extremely expensive purchasing insurance in this industry right now, and doesn't look like it will go down. It makes starting a funding portal a very difficult enterprise. 100% agree with that, particularly when we're talking about that comprehensive coverage. But then you talk about capping risk, and I want to talk a little bit about capping risk in the sense of, earlier you said what they could have done but didn't. Is there anything that you might want to shine like, here's something they did, but they could have done it differently, or to mitigate their risk or cap their risk? you have any pointers for funding portals?
Well, in this case specifically, he probably could have not done business with that gentleman. That would have been a good way of capping the risk, and or stopped once he started realizing that there was an issue. That certainly was an option about managing risk. But yeah, so there's a couple things we're doing that are interesting. There is still a hole that we are aware of, and I don't know who exactly had that question. So, but either way, there's a spectrum of kind of decisions from buying nothing to buying comprehensive, and there are the in-betweens that you can kind of layer in, both helping the issuers get properly insured. And for example, I don't want to self-promote this, but so for issuers that purchase our policy, the portal is automatically added as an additional insured. These little pieces that can be picked up along the way can be used or referred to as demand-based insurance or usage-based insurance, where you can have your base policy and then attach insurance to each issuer as well. So there's these types of solutions that, as we're working through finding the proper solution that actually fits the budget of the portal, specifically the early stage portals, there are ways that we're kind of working through that. But the answer is yes, and we totally agree with it. The market's aware of it. We're in ongoing conversations, even with folks in London and in Bermuda, to help the market move a little bit and actually get a proper insurance offering for this industry. And it's not just the portal operators, it's the other service providers as well, whether you are FINRA regulated under Reg CF or as a broker dealer, et cetera. There is a hole. The comprehensive coverage is overpriced. I shouldn't say it's overpriced. It is sometimes cost prohibitive, but there are other options to layer in risk management in between.
So I just want to make sure I heard you correctly on this point, where you said issuers can purchase policies, which covers the portals. Did I hear that correctly?
Yeah. Yes. So I'll give a little background. So when companies raise capital under Regulation CF or Regulation A, and sometimes even 506C, the existence of general solicitation and combined with non-accredited investors, from an insurance perspective, looks and feels like an IPO. Insurance underwriters say, okay, whoa, that's IPO risk. I'm out. And they're not wrong, but the risk is manageable and it can be tolerated. So the unfortunate scenario is that companies that have raised under Regulation CF or Regulation A, their directors and officers insurance policy excludes them from investor claims. What we've done is we actually built exactly that for the directors and officers. So we filled that hole for the industry. But as part of that, there's a handful of features just because of our intimate knowledge of what the market needs. One of those features specifically is when an issuer that comes through the portal purchases a directors and officers insurance policy from us, we automatically add the portal as an additional insured for vicarious liability. For if an investor sues the issuer and then points at the portal and says, "Hey, you should have known about this. I'm coming after you too." So there's these types of opportunities that you can, as a portal operator, make sure that both the issuer side of the two-sided marketplace, the investor side of the two marketplace, as well as the portal, all has proper risk mitigation in the form of insurance involved.
So I want to go back a little bit to the SEC's actions against TruCrowd.
Okay.
Because it's going to civil litigation. You have the portal operator and the issuer who've been named, and I feel like you brought this up as gatekeeper. So this is a term of art. This is not a term of art. These words have specific meaning. I feel like the funding portals have gone from listing agents to gatekeepers.
Yeah.
Can you elaborate a little bit what you think that means for funding portals in the future, going from one, defining what listing agent is, and secondly, what this new designation as gatekeeper may mean from a regulator's perspective?
I mean, essentially, they're pointing at the portal or the intermediary as saying you have a responsibility here, and this is not just a website that's where it's you're listing people. It was exactly what you said. You're not a listing agent. It's just clear precedence. It's actual language that says, hey, we're not deliberately trying to trash the industry, but we're telling you, the industry intermediaries, that it's important to manage these issues. And I think we all kind of expected it. I think there's a handful of folks in the industry that were hoping it came faster. But you know, the lawyers and the portals are going to be important. And I think that first line of regulation in the industry, the SEC said, is the intermediary, is the portal. And that's kind of what they're saying with the word gatekeeper.
Okay. And so this is very interesting because they were successful in raising, you know, $1,800,000. And so, but then they were misusing the funds, the issuer, and now underneath this new lens that the regulator is looking at it from, the portal as a gatekeeper, they have more onus, more responsibility. It's very interesting from the Crowdfunding Professional Association, if that will be better articulated to say, here's exactly what the SEC expects for the funding portals. Because I know that as particularly new funding portals come up, we're going to want to share that to them as a lesson learned, that transition from listing agent to gatekeeper. And so you brought up another term, bad actor. I don't think that, refresh my memory, did the SEC designate these, call them a bad actor, or go into that bad actor language or territory in this?
You know what? Shame on me. I know Ty dug into this. I don't have that specific notes in front of me around that phrase, but I believe there was something on the fact that there was not a background check was one of the allegations in this, and I think that points to a bad actor requirement. But again, I probably have to punt on that as my co-founder. That's a legal term that he would like, or I would think he would want to respond, and not me.
That's fine. We'll do some follow-up because we want to understand, again, as a gatekeeper, what is your role, right? Can gatekeepers, if you don't follow the compliance, could you be designated as a bad actor?
Yeah, and I believe it was the bad actor. The bad actor reference, I believe, was in reference to the issuer. But again, this is speculation, not speculation, but this is me doing an intelligent guess, not a fact.
Okay, that's good to know. It's all good. So if the bad actor was just on the issuer themselves and not the portal operator or the portal itself, can we even speculate or guess if anyone's going to lose their license?
So that's interesting. There's certainly, that was an interesting, also kind of interesting with the SEC, is that they had that opportunity to take that away. But it was more than a slap on the wrist here. But they certainly gave this portal operator a path out. Whether financially they can support that, that is another question. But with some of the opportunities that around that license, again, it's going back to what you're reading between the lines on that shot across the bow from the SEC, from our opinion, is that they were not deliberately trying to trash this industry, but they were very firmly saying, this is an important thing what you're doing, and we're watching it. And again, like I said, we were surprised by civil litigation. I think there's other folks in the industry, especially in the legal side. We know that there's other folks that are maybe skirting the lines a little bit, and we expect more. We expect more challenges like this, whether it's people take those conversations with the SEC seriously and make adjustments or not. Well, that's going to determine if we see more public-facing lawsuits.
Mm-hmm. Interesting. And so my question is, because going back to the allegations from the SEC against TruCrowd, They're looking for disgorgements of funds plus prejudgment interest. Is that something that insurance would cover or might cover or should cover?
I can speak to our insurance policies, the ones that we've built ourselves. Typically, the bad actor, there's going to be some clause that we can go after. If somebody lied on the Form C, if they were fraudulent, we would have the opportunity to go after that bad actor and or not end up paying for that claim. So, for example, think of it at a very high level. We want to make sure the good guys are taken care of, and people who are like maybe not doing things above water, we don't want to finance their activities, right? So it'll be a case by case basis. We would typically, in the spirit of what we want to do, is say, you do what's right, we got you. Like, things are going to happen, but you're trying. You're not purposely defrauding people. We got you. We're going to take care of this. If you're a bad guy, if you're a crook, then we're going to say, well, we have the opportunity to maybe figure out if this works for us or not. And I think that is, at a high level, not unique to the rest of the insurance industry.
So one of the questions that arises in this instance is the issuers who are raising money, they were in the cannabis and the hemp industry. Being in the cannabis and hemp industry, are you under greater focus by the regulator?
Not formally, I don't believe so. It's certainly, there's more attention to that one. I think if somebody was purposely trying to defraud, is cannabis a better place to cannabis industry and the hemp industry an easier place? I mean, there are some challenges, like the federal regulations and some other natural challenges there, but I don't think there's a formal increased intensity of by the SEC that we've seen. You know, we insure a lot of cannabis operators. We insure a lot of folks that are in the cryptocurrency industry as well, who also kind of publicly have a little bit of a bad rap sometimes. There's a lot of great operators that do things above water. And those folks we're extremely comfortable with. A crook is a crook is a crook, whether it's in cannabis or, you know, they're running a flower shop.
So I'm going to pause for a moment. If anyone has a question or a comment, please drop it there into the chat. We're happy to take questions at any time. I do want to go back to the question about, because we're talking about, you know, at a very high level, the allegations against TruCrowd by the SEC. If they go on a civil litigation, the SEC is looking for disgorgement plus prejudgment interest. We don't know if they're a bad actor or if this will be a slap on the wrist.
Yeah.
But I'm going to come back because I feel like, personally, I think that because they're in the cannabis and hemp industry, there's extra emphasis on this. And I want to talk to you in a moment about the cryptocurrency and tokens industry.
Yeah.
Because what are the insurance requirements? Before, you said issuers could purchase policies. So if you're issuing a token or a blockchain-based digital asset, it'd be interesting to hear from. And I do have a question for the audience. How much do you think the fact that the funding portal helped facilitate the preparation, actually filed for the Form C, played into this?
That's a good question. I don't 100% know how much it played into the action, but I think certainly if we used the phrase best practices a couple times. I think the SEC in some of the actions they took, they made it seem important that lawyers were involved. Mm-hmm. And I think, again, lawyers and portals, we expect to be heavily involved in these things, and it certainly mitigates risk. How much does that specific role play? I don't know. I think there's an omission that was seemed at the alleged omission of certain individuals on the Form C. I think that act, whether or not the portal operators' role in doing the Form C themselves, I don't know. I haven't spoken to the SEC about it to get that specific reaction.
Mhm. And I apologize, I missed a statement from Tracy. She says, it seems like we jump right into the thoughts, but have not heard the facts of what the underlying action or issue is. What were the actions against those parties? Tracy, I apologize for not doing that, so I'm just going to read them very quickly. According to the SEC complaint, Robert Schumack, alongside associates Nicole Birch and Willard Jackson, conducted fraudulent and unregistered crowdfunding offerings through 2 cannabis and hemp companies, Transatlantic Real Estate LLC and 420 Real Estate LLC. Shoemake, with assistance from Birch and Jackson, allegedly hid his involvement in the offerings from the public out of concern that his prior criminal conviction would deter prospective investors. The complaint alleges that Shoemack and Birch raised $1,020,000 from retail investors through Transatlantic Real Estate, and Shoemack and Jackson raised $888,000 through 420 Real Estate. Shoemack, Birch, and Jackson allegedly diverted investor funds for personal use rather than using the funds for the proposed disclosed to investors. As alleged, TruCrowd, Inc., a registered funding portal, and its CEO, Vincent Petraeus, hosted the Transatlantic Real Estate and 420 Real Estate offering on TruCrowd's platform. Vincent allegedly failed to address red flags, including Shoemake's criminal history and involvement in the crowdfunding offering, and otherwise failed to reduce the risk of fraud to investors. And so apologize for not laying that foundation. We just jumped right into it, thought, and made an assumption that everyone was familiar with those facts. So sorry about that, Tracy. And we have another question here. You alluded to the lack of a 10B-5 and the potential significance of that. Can you explain more about what 10B-5 is and why not listing it is meaningful in this instance?
Yeah, I think that to go deep into that, I'd prefer to have one of our attorneys involved, just because it is extremely, but it kind of, by not having it there is essentially gives the portal an out, right? Or there's other precedents that essentially it could have been worse if these things were involved, Section 5 and 10B-5. And that could be a follow-up question. Whoever that is, I'm happy to take that kind of offline as well.
Okay. That came from Brian DeLay.
Okay.
We answered that question. Cherie has a question. What is the worst that could happen to the issuer? Jails, fines, etc.?
Yeah, and so as when I picked the popcorn and started reading this for the first time, when you saw civil litigation, the knee-jerk reaction from our side was one of 2 things. Before we knew any facts, before we knew anything that happened, when we just saw the headline, one of 2 things happened. Either a really, really, really bad guy was involved, and that person was going to go to jail, or the SEC was sending a message. Around jail time, based on what our expectations are, it was more the latter. And I don't think there's an expectation from the majority of folks that are involved here that prison time is in the near future for anybody involved. We could be wrong. We also have limited facts that we know about. But based on the information that we have in the conversations we've had with the industry, this seems to be a firm message that the SEC is sending, not them wanting to lock anybody up.
I think it does set a precedent. And just to recap, bad actors raised about $1.8 million through 2 different offerings, misuse of funds, the fact that one of the issuers had a criminal past was not fully disclosed. This led this to go to civil litigation where the funding portal, the funding portal itself, the operator of the funding portal, and the issuer were all named. And so this is where we're at right now. And so what happens to these individuals, to the question here, are they going to jail, have fines, etc.? We're going to wait and see. But this is really good insight if you're thinking about starting a funding portal, or what are some of the costs that you need to just have on your general radar.
Yeah.
And I do want to circle back to very briefly talk about cryptocurrencies and digital assets as a whole. There's lots of passion around the concept of blockchain and digital assets. Is there anything from a risk or insurance perspective that funding portal should be aware of when it comes to digital assets?
From our perspective, a security is a security is a security. So if you follow the rules and the Form C is filed in compliance with the regs, the 1A is filed in compliance with the regs, and the rules are followed, we're comfortable with blockchain projects. We are also comfortable with the majority of cannabis projects. Granted, based on the federal challenges, there is more risk in there for us. So cannabis folks will still continue to see a little more cost involved. But security is security. We've had that position all the way back to the ICO debacle in 2017. And so we're comfortable with it, whether it's a security token or you're on a paper ledger. We prefer the value proposition of technology. And so we're very supportive of that industry and want to make sure we continue to enable it.
I'm writing some notes because I think that as we've been having this conversation, if you're in the crowdfunding industry, particularly if you're a portal owner, to summarize this, really, it comes down to it's a business decision, what level of risk you're comfortable with, meaning you have the basic insurance or the comprehensive. And part of that business decision is doing the calculus of, is this comprehensive insurance cost prohibitive for your operations, right? And it might also influence, now that the SEC has transitioned to gatekeeper, it might influence how you do your compliance or due diligence, some of those rules to enhance them, because it seems that by naming the funding portal operator and issuer, that the funding portal and the owner of the funding portal, they might need to beef up their compliance in some way.
Or it might not even be beefing it up, Samson. It might be just a very firm reminder, just, we told you we'd like you to do this. Can you please do it? Mm-hmm. And so I think that was more, that's our message, is I think what the expectation from the industry is, like, we want to have adults in the room on our side. And if the adults are in the room and the best practices are being deployed, if risk is mitigated, we want to pass that value proposition forward and lower fees, lower costs. It's a message that we've been able to be successful with, specifically with the issuer coverage. And our next battle is with the investor coverage. And so that's one of those things is, I don't know if it means beef it up, but it certainly is just a firm reminder that we asked you to do this at this SEC. We asked you to do this. Can you please do this, or else we're going to kind of knock on your door.
Mm-hmm. I love it. I love it. So if you have any, we're about to wrap up in a moment. So if you have any other burning questions, please drop them into the chat, drop them into the Q&A, because I think it's a little ambiguous to say you need to be the adult in the room, but it's also, it's like the SEC is figuring out, FINRA is figuring out, and unfortunately, we don't have the bright lines necessarily that funding portal operators would like to help lessen their, just stress of, they're a small business as well, trying to run a small business that helps other small businesses. So that's it left a lot for me to think about and to pass on to the Crowdfunding Professional Association. So David, on behalf of the Crowdfunding Professional Association, thanks for sharing a little bit of insights into the insurance perspective. Before we conclude, tell everyone where they can find you, or if they have a question they want to follow up, what's your email or contact information? Yeah,
www.assurely.com. And then you can come to me directly at david@assurely.com. I think, like I said, most of the folks in the industry I've been familiar with, and so I'm easy to reach. And again, going back to I believe it was Eve's comment, is expensive. We recognize it's expensive. We have an intimate understanding of some of the challenges around risk in this industry versus what the costs are, and we've been successful with parts of it. We expect to be successful again. So hang tight. Everybody continue to participate and be responsible and operate good. And we'll make sure we'll find a successful solution for everybody in short order.
That's awesome, David. I do want to recognize this very last question. Has anyone seen anything that includes FINRA's name in this yet? Given their level of oversight, I'm surprised they were not named or had some PR. So I haven't seen this from FINRA's perspective. Perhaps they worked it out on back end to say, hey, SEC, this is in your wheelhouse. But either way, we can expect that either regulatory bodies will be focused on compliance in the funding space, particularly as for the year 2021, I feel like the crowdfunding industry is going to do about $450 million total.
Isn't that fantastic?
Which is last year we did in 2020, it was about $214 million raised. We're on track, according to King's Crowd / Woody Nice, to do about $450 million. So we'll see, with the rise in the amount of capital raised, you'll see more enforcement actions, because you will just have more issuers and potentially even more funding portals become active. So that's it for the moment. Thanks for joining us here. We're going to record this and post this to for our members. So if you have any questions or comments, you can of course always reach out to David or come back and watch this video later.
Okay. Thanks, Samson.
Thank you, David. See everyone later. Bye-bye.